This video is sponsored by ForexVPS.net. ForexVPS.net is an industry-leading VPS solution for Forex traders. They have world-class customer support via their website 24/7 and a cloud-based VPS solution for you to access your VPS anywhere around the world. So stop letting your computer run 24/7 and blow up because it overheats, and switch over to a cloud-based computer system so you can run your expert advisors and indicators in the cloud. Use my coupon code JUSTIN30 and you'll save 30% off any plan you choose. Hey, Editor Justin here. I just wanted to show you my invoices for the past 2 years that I've been a customer of ForexVPS.net. I know there's a lot of people on YouTube, they say, oh, I'm very happy I got sponsored by this company because I've been a customer for a long time, but they're just saying that to make it seem like they have been. I've actually been using this product for 2 years. Whenever you see me make a video about an EA or if I'm testing out an indicator, I just hook it up to my VPS on ForexVPS.net. I actually have 4 VPSs. It's kind of ridiculous. I have them all for different purposes, but I use my VPSs to test out different EAs, to test out indicators, to see what works with me with my personal trading, so I don't have to leave my computer running 24/7. So I think it's a really great company because they have 24/7 customer support. That's my favorite part. There's a time when I was having an issue with my VPS and I had to contact them at 3 in the morning, my time here in Florida, and the guy answered my question in 5 seconds. The customer support rep was very knowledgeable, very quick, and probably the most polite customer support I've ever had in my entire life. So I really do believe this is a great option if you're looking for a VPS, if you want to host an EA, or if you want to use your indicator and you don't want to leave your computer running 24/7. This is definitely a great alternative to leaving your computer running 24/7. So again, use my coupon code here you'll see on the screen and use the link down below and you'll get that lifetime discount. It is not a monthly or yearly discount. This is a lifetime discount. This is something that they do not do for anyone. If they do, it's probably like a one-time thing they've done before, but they very rarely do a discount like this where it's a lifetime discount. So take full advantage of it if you want to get a discount for this product. So enough talking, let's get started with the video. Before I begin this video, I want to make something very clear. What I'm about to show you here today will not replace 5 years of experience. Another thing that I see people doing is they keep going from video to video, YouTube channel to YouTube channel, from course to course, signal seller to signal seller, and they're all looking for that one magical thing that's going to make them rich in this industry. Here's the truth. It's not the strategy itself that will make you money. It's your mindset, your risk management, your patience, and how consistent you are with your trading. I can give you the keys to the kingdom. I can give you the golden secret to everything in this world or whatever, if that even exists. I can give you the best trading strategy on the planet and you'll still lose money. Because if you can't control your risk management, if you can't control your emotions, nothing I show you, nothing anyone on YouTube will show you will make you money. It's because it starts with you. This is why I tell people you don't need to buy Forex courses. You don't need to join these MLM companies. You can learn how to trade in 5 minutes. Trading wasn't designed to be hard. It was designed to be simple. The only reason why trading is hard is because as human beings, we were not built to trade. We were not built to see hundreds, if not thousands of dollars fluctuate with the money that we earned. You know, when I was a lifeguard and when I made $9.50 an hour, that was very precious to me because I worked an entire hour to make $9.50. So if I were back in the time, if I were still a lifeguard, and if I put money into the market, if I was day trading, I couldn't handle that. Seeing $10, $20, $30, $100 fluctuate just like that, I start thinking, man, that's an entire day's worth of work at my job that I just lost in a day or that I just made in a day. And it messes with your head. This is why trading is hard. It's because we're not used to it. We can't handle the fluctuations in money that happens really fast. I know I'm jumping around right now, but I just had to say, what I'm about to show you will not replace 5 years of experience that I have in the market. But I really do hope that after watching this video, your trading will become a lot more simplified and fine-tuned to the way where you can get even more accurate entries. My goal with the way I'm trading right now is I trade less. So if you don't see me post on Instagram for a few days, I'm literally doing nothing. I'm playing a game, I'm riding my bike, I'm chilling with my friends, I'm doing something where I'm not trading because I'm waiting for price to hit specific zones and then I get in based on the requirements I'm about to show you here in today's video. One thing I want to mention is that the video you're about to watch of me explaining how I'm trading, it was actually a recording of one of the one-on-one session students that I have from Instagram. Well, it's not technically from Instagram, but if you visit my link on Instagram, you go to my Instagram page, click the link in my bio, you can schedule a free one-on-one session or a paid one-on-one session. You're probably wondering what's the difference between the two. There is no difference. There is no difference between the free or the paid sessions. The reason why I have paid sessions is because I only host those on the weekend. And I only host paid sessions on the weekend because I like to use the weekend towards my free time. So you're basically paying for the time that I won't be spending time to myself, like, you know, hanging out with my friends, doing stuff, frisbee golf, you're basically paying for my free time. So that's why I charge on the weekends and I do free sessions during the weekdays. So if you would like to book a session with me for the month of August, July 31st, I will be making an announcement on my Instagram page, on my Instagram story, letting you know when booking for August will be available. So if you want to book for August, follow me on Instagram, turn your post notifications on for my Instagram stories and my posts. So the moment I say you can book a session, either free or paid for August, you can do so right away, because trust me, the moment I make it available to book, it's going to get booked out in literally 3 minutes, 3 to 5 minutes, maybe shorter. So make sure you pick a date and time and book it right away. So with that being said, let's get started with the video.
Hello.
Hey, how's it going, man? Can you hear me?
Yes, I can hear you. Can you hear me?
Yes, sir. How's everything been, man?
Good. Yep, just put up with 2 days of resting from my migraine, but I'm feeling better now.
Oh man, I'm glad to hear that, man. My AC actually went out for the past 2 days, and it's been brutal going to sleep with the crazy heat. But
right.
yes, sir. I just want to say I appreciate you, taking the time to do this one-on-one stuff, man. I greatly appreciate that.
Yeah, of course. No, I mean, because I'm making the video, and I'm pretty sure you saw on Instagram on
Right.
making the video now. So you're gonna get the sneak peek before I make the video soon this week. So
I'm excited, man.
Yeah.
I've been looking forward to this meeting for a while now, so I'm glad it's happening.
Yeah. No, I mean, at the end of the day, I love showing people, because everyone has the same reaction. They all say the same thing, like, wow, it's that simple. Well, that's it.
Oh man,
it takes 5 seconds. That's it. I'm like, yeah, that's it. So, I mean,
man,
at the end of the
awesome.
day, it's not going to replace 5 years of experience, but it's going to help you.
Absolutely.
It's going to help you tremendously. Like when you look at the chart, it's going to be a lot more clear and a lot more simple in terms of analyzing.
Absolutely.
So it's going to take all the clutter away.
Yeah, I'm not trying to take up too much of whatever time, all the time that you have offered. But yeah, man, a lot of my friends, they're in it. They're expecting, one of the, you know how it is, how the industry is, get rich quick, whatever. I'm in here for the long term. I genuinely want to do this I see myself doing this for the rest of my life, really, or as of now. So.
Right. No, I mean, that's a good way to look at it. If you really want to do it, it's not going to be easy, but it's 100% worth it if you stick with it. So stick with it, and it's going to pay off.
I'll show you my notes on this thing, man. I have literally pages on pages of notes, research, studying.
Perfect.
I'm really doing this.
Awesome. But yes, take notes for today. It'll be very simple notes, but I mean, you could put all the notes on probably a third of the page. I mean, it's not a lot, so it'll cool. But yeah, definitely take notes. So, can you see my screen?
Yep.
Okay. And how does the microphone sound? Does it sound good?
Oh, it sounds crisp. Sounds really good. I don't know does mine sound okay too? I think.
Yeah, yours sounds good. So let's go back to when I started doing my sessions, and let me show you the simplicity of this. And by the way, this works on anything. I've done this on Bitcoin, Ethereum, Ripple. I've done this on gold, silver. I even did this on corn, trading corn. Yeah, so Forex, you name it, works on everything. I'm going to show you also the pairs like GBP, JPY, how I called that spike up on the buy on Instagram. I'm going to show you a lot of stuff in today's session, but I'm going to do it pretty quick. So I'm going to try my best not to do it too fast. But the key thing about the strategy, it definitely revolves around key zones of support and resistance. That's the main feature. So that's the simplicity behind it. So first, what we're going to do, okay, so let's find a key zone of resistance. No one can deny this is a good zone of resistance. One rejection, second rejection, third rejection. Every time it hit this zone, it just spiked down hard. Okay, so easy. And we're on the 1 hour time frame for US30. So easy zone of resistance. So what I'm going to do is I'm going to draw a rectangle from here, top of the wick to where the wick started. Just going to extend it all the way. That's just how I like to draw my zones. So price was within here, price was within here. Okay. So now what we're going to do, let me go to my home screen. Okay, here we go. So you see that, right?
Gotcha. Yep.
Right. So even if you didn't know what the name of this was, you've definitely seen them. They're all over the charts.
Oh yeah.
So that's a tweezer top, that's a tweezer bottom. For simplicity's sake, to keep this simple based on how we'll be trading, based on what I'm doing, our definition of a tweezer top is going to be anything that has 2 candles next to each other where the wicks are the same size. Okay. Cool. It doesn't matter the size of the candles. For this specific definition of a tweezer top and tweezer bottom that you see based on this Google image, The textbook definition is this. This is what an official tweezer top looks like, and that's what an official tweezer bottom looks like. But for my definition, you can forget about the size of the candles, of the bodies. They can be any size. So this green body could be this size. It could be like a really big body, and this red one could be a small body. It doesn't matter. As long as the wicks right next to each other are equivalent length, that's all that matters, okay? So that's all we're paying attention to. Two candles next to each other where the wicks are the same length. Simple, okay? So that'll be a tweezer top, and that'll be a tweezer bottom. So now that I mentioned that, up here at the zone of resistance, do you see anything resembling what I just explained?
The last one on that support right there looks
Resistance.
very. Yep. I mean,
Okay.
I'm sorry, resistance. Yeah.
Yeah,
my
you're
bad.
good. You're good. Yep, that's it. And tell me, what kind of candle is this red one?
Just a normal bearish engulfing. Like,
Perfect.
super
Yeah.
bearish engulfing. Like
Mhm.
that. Yeah.
Okay.
Especially on that 1 hour.
There we go. So that's step one. So write that down. You're looking for a key zone of support or resistance based on the time frame you're looking at. So as an example for US30, if I scalp, I like to go on the 5 or 15 minute time frame. But of course, it's not like I look at only one time frame. I look at all time frames to get a general view of what's going on. And that's going to be important for later on in today's session. I'm going to show you why you don't just want to look at one or two time frames. But I'm pretty sure you already know that you want to look at all time frames. But based on the 1 hour time frame, key zone of resistance, we see a variation of a tweezer top. Remember, the size of the candles doesn't matter. It's just the wicks, same length.
Right.
See, even though they're not 100% the same length, because when you zoom in and look closer, the red wick is about 90% the size of the blue wick. But in my definition, that's okay. As long as they are 90% the same size or 100% the same size, that's all that matters. So in this case, this is a variation of a tweezer top based on my view of tweezer tops. We see a bearish engulfing candle. We're at a key zone of resistance. My entry is at the close of the bearish engulfing candle. We all know why you don't want to close. We all know why you don't want to enter a trade while this candle is still active, because what if this candle is forming a tweezer top and then 10 seconds before the candle closes, it shoots straight up, right?
Yep.
That has
100%.
happened. That has happened to me, and that's why I've learned. Wait till it closes.
Yeah, luckily I learned that concept like earlier. It's like you wait till the candle forms, then make a decision.
Yeah, not fun once you make the mistake, but it's definitely a good lesson. My entry's right here. And my take profits, now you have two things. You could just do, 3 take profits, or you could just do 1 take profit. It's up to you. For me, I like to have three mental take profits, like take profit 1, 2, 3, but you can do it however you want. So let me explain what I'm saying. So here, I do my take profits based on the next levels of support. Of course, if I'm in a sell position. So from here, take profit 1 could be here. See how it wicked perfectly. So
Yep.
for me, that could be take profit 1. Take profit 2 could be right here for me. And take profit 3 could be somewhere here. And this was a trade that I did. This is one of the first trades I did with a session student. So from up here to here, take profit 1 is about 230 pips, around that. Take profit 2 is about 500 pips. And take profit 3 is about 625 pips. So from here to there, blew past take profit 3. But my take profit was right here. This was like an obvious form of support for me. So that's why I did my take profit there. So for me, I made about 500 pips on that, and I was scalping my way down. First, now let me mark up a good zone of support. Here's a good zone of support. We see this really big wick. And you see how it bounced off right here and it went up?
Yeah.
So it was breaking through this several times, and then it finally bounced up here. So now we're ranging in between this resistance and this support zone. And then it finally rejected off here and spiked up, okay? So this is a good zone of support. Now we're gonna look at what's called John Wick. Okay, have you watched any of the John Wick movies?
I've watched only the third one.
Okay, but really awesome movie, right? Really,
Yeah,
John Wick. Right, so just to give some context behind why it's called the John Wick strategy, one of my first students, we did really good that week when I was showing him what I'm showing you here today. We did really good that week, so he sent me a GIF, one of those moving images of John Wick shooting in the movies, and he said, "Oh man, we killed it this week in the market." And so that was just the funny way of us coming up with the name John Wick. So what I'm going to show you here is called the John Wick setup. So same concept. You're going to look for the key zones of support and resistance. So in this case, we're at a key zone of support down here. Now what we're going to do, instead of looking for tweezer tops and tweezer bottoms, we're going to look for fat wicks next to each other. So like this is a fat wick, that's a fat wick, that's a fat wick, right? We're going to look for big wicks right next to each other. When I say
So
next
they
to
have to be like a tweezer top but with fat wicks or just a fat wick?
So when I say we're looking for fat wicks next to each other, I don't mean actually next to each other like this or like this.
Okay.
I mean separated by a few candles. Okay. So
Yeah,
you see how this big wick is separated by a few candles with this big wick?
Wait a second, because my zoom. Yeah, I see.
See, so it's separated by a few candles. So same here. This, let's zoom in a bit. This blue wick right here, it's separated by two candles with this one. Okay. So you have a big wick here and a big wick here. And you see how it bounced off this key zone of support?
Yes.
That's it. So it's the same concept as the tweezer tops and tweezer bottoms at key zones, except we're doing John Wick. So fat wick next to fat wick at a key zone of support. Our entry is at the close. And tell me, what type of candle is this? This bullish one.
It's a bullish engulfing.
There you go.
Yeah, it's a bullish engulfing,
Yeah, perfect. Simple, right? So John Wick, key zone of support, bullish engulfing candle. So our entry is at the close of the bullish engulfing candle. And our take profits are based on the next levels of resistance. So take profit 1, take profit 2, and take profit 3. So this is one of the trades that I called out with one of my students from Singapore like a week or two ago on a Friday. And I got in late because I was showing him exactly what I'm showing you here. And so I ended up getting in right here. But my take profit was up here and it was good. So assuming you got in from here and your take profit was here, which my take profit was here, that's about 450 pips in 1, 2, 3, 4, 5, 6, 7 hours.
Kind of got distracted, wasn't able to buy it, but yeah, I finally got in late, but called it out down here and happy to see another successful live trade for the students.
That's nice.
Yeah, very nice. So that's that. And same thing when it comes to the stop loss placement. I place my stop loss below the wicks. The reason for that, once again, is because if your stop loss hits, if your trade hits that stop loss, that's because the John Wick is no longer valid, and it's probably going to keep on spiking down.
Yeah.
Very simple. So let's do the math from here to here. That's about 170 pips stop loss in order to make 450 pips. Pretty good risk to reward.
100. Good risk to reward to something.
Now let's assume you hit your take profit 3. If let's say you wanted to wait all the way up here, if it did hit your take profit 3, you're risking 170 pips to make 738 pips.
Nice. Take profit.
So, and again, this works on every time frame pretty much, but I don't trade on the 1 minute or the 5 minute. I usually trade on the 15 minute or higher, specifically for US30. And let me give you an example. Let's go right here. Let me go here to the 15-minute time frame, and let me show you this. Okay. What I do is I draw my key zones of support and resistance based on the time frame that I'm looking at. So in this case, I'm looking at the 15-minute time frame. So if I want to scalp based on the 15-minute time frame, I'm going to draw my zones on the 15-minute time frame. Pretty simple. So what's it called? Rejection here, rejection here, rejection here, and we had a fourth rejection. So we rejected 4 times at this price. So this is a key zone of support. Very simple. Now tell me, what is this right here? What is this setup called?
John Wick.
There you go, John Wick. So our entry is at the close of this second wick right here.
Yes.
Our stop loss is below the wicks, about 50 pips. And our take profit is the next zone of resistance. So somewhere here or up here.
Or somewhere there.
This is a trade that I personally did. So my take profit was up here.
Let me put my phone on silent so that I don't get bothered anymore.
Oh, yeah, you're good.
Nice. And if you look at the right at the right, you've got another zone right there. Is that a valid setup?
This
No,
one?
or no, on the same level, but it turned onto resistance on the second touch, right there,
Right
on the
here.
second touch.
Yeah.
You've got another
Yeah.
2
You got
weeks.
another John Wick. Yeah.
Yeah.
Exactly. I was going to point that out. I'm really happy that you spotted that. So here it was support, broke through support. Now it's resistance. Fat wick next to fat wick on the 15-minute time frame. Your entry for the sell position is at the close of the fat wick right here. And your take profit is the next zone of support. So somewhere down here or here. And look how it spiked all the way down.
Yeah.
So let's do the math. From here, you're risking 50 pips in order to make 250 pips. That's a 1 to 5 risk. You're risking 1 to make 5. Let's do the math
Very
here.
good.
John Wick entry. Let's say your stop loss is up here. Let's just say 50 pips. You're risking 50 pips in order to make around 112 to 180. Or if you want to go all the way, 260.
Yeah.
Boom. That's it. All I do to keep it simple, as long as the tweezer top and the bearish engulfing candle was spotted at a key zone of resistance, it has to be at a key zone based on the time frame you're looking at, okay? So it has to be at that key zone. If it's not at the key zone, we're not even going to enter, right?
Makes sense.
This is at the key zone, tweezer top, bearish engulfing. This happens to be a really big engulfing candle. So the stop loss is going to be bigger. All I do is I personally set my stop loss above the tweezer top. Reason for that, it's because this is why I said I think you're really going to love this, is because it has to do with structure. If it hits that stop loss, what does that mean? It means this
You don't want any part of it.
Yeah, it means it's no longer valid and it broke our quote structure of what I'm showing you. So if it hits that stop loss, that means it's probably going to keep on going up. In this case, if they hit stop loss, you want that to happen because you're protecting yourself from a potentially even worse move.
Absolutely.
So in this case, because this engulfing candle was really big, the stop loss is about 230 pips, but my take profit was 500 pips. So in this case, it was a 1 to 2, but there are many other examples I'm going to show you of really insane risk to rewards. Like you love 1 to 10, 1 to 20, things like that. Okay.
Yeah. And at the end of the day, I understand that, like, you know, as long as you're consistent with your risk management, like many strategies work, you know, they're a strategy for a reason, but as long as you have that, you know, like I'm sure you always preach it too, risk management is key. You'll be profitable as long as you stick to it. So
exactly. Yeah. I mean, I did only one trade so far since yesterday. Let's say Tuesday. Yeah. Since Sunday and yesterday, Monday, I only did like one trade so far. It was like a $300 trade. And I'm used to doing like 500,000 a day. So I'm just like, you know, I controlled myself because I'm waiting for those key setups. That's it.
Right.
Just waiting for a key setup. So it's also, controlling that patience and everything. And, you know, I think one thing is once you get to that point where you're pulling in a few $1,000s a day, you feel like you have to keep hitting that number. Otherwise you're not good enough. Right. It's this weird thing, you know? And so you have to learn to control yourself. Like, hey, listen, you don't have to do 1,000 every single day. You know, it's like, if there are any setups, don't get into a setup.
Honestly, I got to that point recently. Like I learned that recently, got through that. Like I know exactly what you're talking about, man. It's crazy.
Perfect.
Of course, with experience, it'll elevate, you know, that, you know, learning, but
exactly.
I know what you're talking about. Yep.
Yeah. So okay. So let's just jump back into it. So we still have quite a bit of stuff to talk about. So let me know, what did you write down so far based on the notes?
I wrote down, you know, the first step is to identify the key levels of support and resistance. Of course, the higher time frame is going to give you a better idea of where those zones are, but it's not necessary. The tweezers, bottoms and tops, the bodies do not have to be the same size, but the wicks do, as long as it's 90 to 100% same size. Second step is look for those tweezers, tops and bottoms at those key supports or resistance zones. And then, of course, enter after the body is formed if it still is maintaining that structure and look. And then after that, really just determine where the next zones are to see where you want your take profits to be. And then stop loss, of course, right above the wicks.
Perfect. Now let's go back in time. Let's do a little test for you here. Okay.
For sure. I like this.
Do you see anything here that stands out very easily?
I immediately, right off the bat, those two wicks on the very bottom, right there. Those two, yep, right there.
The two tweezers bottom.
I see. Yep, I see the tweezer bottoms right there, and I see, you know, sort of level of previous resistance, kind of a break, and yeah, like right there, and then a kind of break and retest of the, yeah, like pretty much there onto the right, like from,
Yep.
yeah,
Mhm.
pretty much that whole zone. My bad. Yep.
Yeah, no, you're good. I know exactly what you're talking about. Yep. So watch this.
That's what I see right off the bat. But
Yeah, no, that's exactly what I was expecting. Yep. Because it's this, something like this is very easy to see, right? Key zone, resistance, support, and look at that. We see a tweezer bottom. So tweezer
Right.
bottom, take profit, next spot of resistance, something like right here. So, well, you could do here, but or here. But I like with this, you're going to notice that if you see a tweezer bottom or tweezer top at a key zone of support or resistance, in this case, tweezer bottom at support, tweezer top at resistance. If you see a tweezer bottom at a key zone of support, it's usually going to spike up pretty hard. This was one example where it didn't spike up really hard, but it still spiked up decent within relative price.
Yeah, it's still enough. I mean,
yeah,
that looks great.
Yeah, you haven't seen anything yet. I'm going to show you most of the time. Okay, this is something I also want you to write down. If you see a tweezer top or tweezer bottom at that key zone of support or resistance, that usually means it's going to do a hard reversal to the next highest or lowest zone of support resistance. So as an example, the trade I'm going to show you, we'll take a look at GBP JPY, where I told everyone it was going to spike up like crazy. We saw a tweezer bottom at a key zone of support on the 30-minute time frame. So that gave me a good indication it was going to spike up to the next highest zone of resistance within relative price. So
yeah, 100%.
Yeah, and so same thing vice versa for a sell. If we see a tweezer top at a key zone of resistance, that's a good sign. It's going to do a hard reversal down to the next lowest zone of support based on relative price. So I'll show you that. So that this is where the huge moves come in. And so when I showed you US30, take a look at this, okay? So let's just mark up this zone really quick. Okay, so from the start of that wick to where the wick started, let's extend it out. You're gonna laugh your ass off when you see this. What do you see?
Dude, very clear. It's so clear.
Tweezer
Right
top,
there, man. Oh,
bearish
wow.
engulfing candle, entry right here. Didn't this look exactly like
Dude,
this one right here?
That's crazy, man.
So this is why I said I got my entry right here. I got my entry right here. And everyone's like, how'd you know to sell up there? I even told people I have the video. I still have the video on Instagram. I said right here, I'm expecting US30 to continue pushing up all the way here.
Another successful one-on-one session today. So yesterday I was in a buy right here. My take profit was all the way up here. Smashed the take profit, easy $300, $400. And today on the live session, I told don't be surprised if you see it go all the way up here. And so far it's making that push. So let's see if it actually does keep going all the way up here.
And everyone's like, why? The moment I said that, it went down. So I had people saying like, oh, see, no, it wasn't doing exactly what you
You're
said.
always going to have
Boom.
people like that.
Yeah, and I'm just like, dude, I don't even care what you're saying. Is it going to go up? Wait, let me show you why. So do you see anything right here?
I see one right there. It like right there, yep, but it didn't fully engulf does it need to engulf?
It doesn't. Right. That's something I forgot to tell you.
Because cool.
So it's not required to have an engulfing candle, but that is extra confirmation of that hard reversal. You're going to notice there are times when you see the tweezer tops, tweezer bottoms, and they're not engulfing candles to finish it, but they still do a hard reversal. It's a lot stronger if it has that engulfing candle. So what I always tell my students now is, if you want, you can just forget about the part where I said you don't have to see the engulfing candle, and just look for ones that do have the engulfing candle, because that is the strongest.
Just a lot more probable.
Exactly. So here we have support, but let's go back in time to make it look a lot easier. Okay. So let's go back to doing this. We're still using the same zone on the 1 hour time frame. It's still a key zone, right? And you see how price didn't touch it, but it was like wicking. So when it created that wick and it did that bullish engulfing candle, this wasn't the tweezer bottom, but when I saw that engulfing candle and then I saw the tweezer bottom right here, after it kind of rejected off that zone, I was like, okay, this is a good entry for me. This is where the 5 years of experience comes in, right? This is why I said, even though we don't see the tweezer bottom at the zone, We saw the rejection here. We saw this bullish engulfing candle and then the tweezer bottom. That's why I got into a buy. So this is the one trade I got into a buy right here. And my take profit was right here. Okay. My take profit was right here. So I bought right here, take profit 1, take profit 2, take profit 3. The market literally tells you where to set your take profit. So for me, remember what I said, if you see a tweezer bottom at a key zone of support, that usually means it's going to do a hard reversal to the next highest zone of resistance up here.
Boom, right there. You're just playing ping pong at this point.
That's it. And that's why I told everybody on Instagram, I'm expecting it to go all the way up here. Tweezer bottom, key zone of support, reversal to the next highest zone of resistance. And boom, this is doing exactly what I'm doing right now, which I'm going to show you on the 4-hour time frame. Get ready to laugh even more. Okay. Oh, let me show you.
Oh, man.
This was initially one of my first, this was initially a losing trade, right? Because you see this resistance right here. Now it's acting as support. I saw a tweezer bottom. So this is what I'm saying. You're going to have a losing trade and that's fine. So my entry was right here. See tweezer bottom, engulfing candle.
I see.
So I entered my buy right here. I was initially about 131 pips in profit, but it's okay because I set my stop loss to break even and it went down. So when I say losing trade, not official losing, but hit break even, but it didn't go as planned.
Even if there are, I don't believe in 100% strategy for me personally. Like, I'm sure there is, but I'm not even chasing that. I don't care.
Yeah.
Like, that doesn't interest me.
Yeah. This is going to help you so much. Keep it even more simple. But yeah, so that one lost.
Crazy.
Yes. Yeah. So that one lost, but that's okay. I told myself I'll wait for another setup because with this, you're going to see setups all day, every day. You're going to laugh. You know, you see them all day. So on anything you want to trade, but US30 is the best because it's, you know, it moves like good amounts and as long as you're using good risk, like you can make a ton from it. So anyways, yeah, that was
ask you real quick.
Yeah,
I'm sorry for cutting you off.
No, you're good.
Do the wick sizes, like if there's like, do they matter? Like this, obviously they have to be equal, but are you looking for like bigger wicks or would that just be a higher probable thing? Or
nope, it doesn't matter how big the wicks are. You could have the smallest wicks on the planet, like this, for example. You see that?
Yeah, super small, and it still works. Cool. Perfect.
Yes. So, but if you see something like this at like a key zone, like up here, something, that's great. So it doesn't matter the size of them as long as they're the same length or at least 90% the same length. That's all that matters. All that matters.
Perfect. Thank you so much.
Yep. So well, now watch this. Let's go to the 4-hour time frame, and this is why my student from Iran, I forgot his name, but I have this session recorded. I called out the sell up here. Can you tell me why?
Super clear, man. That tweezer top right there.
And what type of candle is the red one? What type of candle is that?
Bearish engulfing. Another
there you
one.
Go. So look at this. Man. Rejection here, rejection here, rejection here. You know, we have these wicks. So it's like at this point, it was kind of like a support thing, broke through, now it's resistance. But anyways, rejection because of that fat wick, resistance. We see a tweezer top at this key zone of resistance and a bearish engulfing candle. So on the video, I told them from here to here, it's going to go down. So tell me, do you see anything right now at relevant price?
Yeah, I do, actually.
What do you see?
Right, exactly where the price is right now. There's a tweezer top.
Perfect. Yep. And what kind of candle is that?
It's an engulfing candle.
There you go.
And it's a key level, actually.
Yeah. There you go. We have rejection here, rejection here, rejection here, tweezer top. Even though it's not perfect, it's about 90% the size, so it's valid in my opinion. And we have a bearish engulfing. So what would your take profit 1, 2, and 3 be?
My first take profit would be at.
So I'm gonna move my mouse down and tell me when to stop for take profit 1.
Okay. My take profit 1 would be. I want to be conservative a bit.
Okay.
This would be my first take profit. This one.
Right here. There. Perfect. That would be mine. So what's your take profit 2? I'm gonna go down.
Right there.
Perfect. And what could be your take profit 3?
3 would be here because there's also a resistance level that has turned into a support.
Perfect. You nailed it. So let's do the math. From here to here, that's 232 pips. From here to here, that's 413. From here to here, that's 770. down. And what is the thing that I said about if you see a tweezer top at a key zone of resistance? Where do we expect it to go?
Dude, this thing is gonna go like down all the way to the next major support of support.
Yeah, to the you know, it's not guaranteed because remember that one
Not
trade I
guaranteed,
showed you.
but it's like
Absolutely
right.
High probability. So I told him I would not be surprised because I even showed on Instagram my entry was here and my take profit was initially like somewhere down here. So that was like 500 pips, and 500 pips for this broker times the 3 mini lots was like $1,500 take profit, right? So
right.
This took about 4, 8, 12, 16, 20. It took about a day for it to hit my take profit.
About a day. That's
so $1,500 for the damn done. So
right.
So that's what I'm saying. Super simple. I didn't draw trend lines. I didn't use indicators. I still use divergence, by the way. The reason why I don't have it on my screen is because I like having it on my phone because I like to have the whole screen when I'm looking at. Because when I have it,
divergence is one of mine too.
Yeah, I love divergence. I still use it, so I find it funny when people
I actually learned it from you, bro. Like I learned it from you, the divergence strategy. Yeah, like I have a whole freaking note set up thing from just your stuff.
Perfect. Yeah, and I'll show you GBP JPY. That's the perfect example of the divergence that was there.
When I tell you I'm on the charts for a while, like learning and practicing for literally minimum 12 hours a day. I don't know if you believe that, but literally, bro, like I want to do, like I'm determined to make this work.
Yeah, no, I mean, definitely. So, no, I'm a big believer in being on the charts all the time. I mean, even when I don't
like I'm executing.
Yeah.
Mm-hmm. I'm not executing anywhere near that. It's just I'm, analyzing, seeing how things move, et cetera, et cetera.
Right.
And, of course, I'm only 10 months in, but the first person I learned from the beginning, he was like, dude, like you're better. You're doing better than people that I know have been in this for like 2 to 3 years type of deal, which I don't know.
Yeah, some people are naturals. It's like anything else. It's like soccer. It's like weightlifting. Some people just pick things up so easily, and other people can't pick it up easily. Like when I first learned from my first mentor on YouTube, he lives in Seattle. He's like a year younger than me or the same age as me. I forgot how old, but he's basically around my age. And he makes millions, mainly from holding his gold positions from like 4 years ago. He makes millions trading in the Forex market. And when I learned from him, he works at such a high level mentally with his trading. It was like sitting in front of Einstein and him explaining the theory of whatever, and nothing about physics, right? So for me, listening to him talk, I was so confused. I didn't pick it up at all. But I enjoyed the experience because I got to sit in front of him and I got to see how his brain operates, even though it didn't really work with my brain. Because you see how simple this is I'm showing you? Now, imagine,
it's crazy.
And now imagine someone trying to teach me like what quantum physics is. It's like, I'm not gonna.
It makes perfect sense to them, but to us, like, yo, chill out. What's going on?
This is why this strategy works great with my personality, because it's something that I can relate with. It's so simple, and I still use divergence. So here, let me show you. This is the GBP JPY trade. So awesome. I think it was last week, whenever this was, July 17th, market open. I was telling people from right here that it was going to spike all the way up here. Okay. So let's go to let me draw a line so I don't lose my spot. Okay. So let's go to the 30-minute time frame. Do you see why I bought?
Oh, wow. Yep.
Yeah, right here, right?
Yep.
So the first buy would have been a loss because of that first tweezer bottom at this key zone of support, right? So I would have bought right here at the close of the bullish candle, which is right here. My stop loss was about 23 pips. So first one is a loss. No problem. We got a second chance right here. So we enter right again, because we're at a key zone of support. That's very, very important. Key zone of support, one rejection, second rejection, third rejection, and we see a tweezer bottom right here. So we enter right here, and our stop loss is down here about 21 pips. And our take profits, remember what I said, tweezer bottom, key zone of support, usually means it's going to spike up to the next highest zone of resistance based on relative price, which is here. So in this case,
right there, yep.
I told everyone it's going to spike up here, and look, boom. So from here to up here is about 155 pips. So let's look for take profits 1, 2, and 3. Take profit 1 could be either right here or right here. So somewhere within this zone. Okay, that's pretty decent. But because we see the tweezer bottom at the key zone of support, we know it's going to do a pretty hard spike up. So we could just say take profits one here. Take profit one could be here. Okay. So take profit one, 81 pips. Take profit two, 114 pips. Take profit three, 155 pips. Like that's it. Now let's look for divergence. Okay. This is so everyone can see how simple it is. Okay. So
Absolutely.
look from here to here. Okay. So from right here to right here, that's a higher low. But from right here to right here, that's a lower low, which means bullish hidden divergence, which means trend continuation up. And look at this. On the 1 hour time frame, what's it doing? Higher highs, higher lows. Higher highs, higher lows. So we see bullish hidden divergence here on the 30-minute time frame. And we see the tweezer bottom at a key zone of support. So hello, boom. Like
all the confirmations, man.
Yeah, and that's only like 3-something confirmations. So that's all you need, you know?
Yeah.
So that's the simplicity.
They're all high probable, so.
Oh yeah. Yeah, my first breakthrough was divergence. That was my aha moment 1.0. And this right here was my aha moment 2.0. And I found it just by looking at the chart. And I asked myself, like, hey, what is something common among most reversals that I see? And I saw these things. And I'm like, oh, what's the name of that? Because I've seen that reversal pattern before. And then I looked up tweezer top, tweezer bottom. And then anything that I see that has the same sized wicks, I just call it a tweezer top, tweezer bottom for my simplicity.
Right.
But yeah, those engulfing.
And I remember you were talking about like kangaroo tails, and
yeah,
I believe that's what it was. So I tried that out too, like a while ago. But
those are
this
good.
Is definitely
yeah. You're gonna notice that for the John Wicks specifically. Yeah. You'll notice
it's
sometimes,
pretty much.
Yeah, not all of them are kangaroo tails, but for the tweezer tops and tweezer bottoms, sometimes you'll see kangaroo tails. So if you have the kangaroo tail indicator where it sends you notifications, that's still good to use. I definitely recommend that for this. In fact, it's even better to use the kangaroo tail indicator with something like this. So if you have the divergence indicator, if you have the kangaroo tail indicator, you could use those both for this. Just don't rely on that. Just use that as confirmation. So if you see the setup, like we explained here, and then you get notifications from both divergence and kangaroo tail, oh my gosh, it's like that's just amazing. Yeah,
golden. You're golden.
Yeah,
man. But dude, like, I can't thank you enough, man. For real. Like, this is I'm really gonna go ahead and start back testing these and hopefully start executing some trades. And you know, once I see some success with it, I'll definitely be you know, sending you some stuff on Instagram or whatever. Awesome, man. Appreciate it. Hopefully we'll be in, you know, contact later. But yeah, man, I don't want to take up too much of your time.
No, you're good. Thanks for hopping on. And yeah, hope you use those notes, everything. Yeah, this week you're gonna see a ton of setups. So yeah, any good trades you get in or something. Yeah.
Awesome, all right, man. Bro. Awesome. Well, yeah, I'll let you get going. I'll see you later, bro. Take care.
Cool. Take care. Have a nice day. All right. Bye-bye.